Joining us now in an exclusive interview is Daniel Schreiber, Lemonade CEO and co-founder. Thanks so much for joining us. Good to see you, Daniel.
Great to be with you. Thank you.
So I guess at essence in this debate that's been sparked the last couple of weeks is the valuation multiple that your company enjoys. And a lot of that rests on the level to which people believe you are totally reinventing the insurance market or not. What do you say to the critics that say lots of other existing insurance companies are using tech and data and AI in a similar way to you?
Well, I think those who have been investing in the company, and as you say, the stock has been up some 5x since our IPO, are believing in the thesis that insurance may be the most disruptable industry on the planet. And I think there's a bit of pattern recognition going on here. You know, we saw in recent years, we saw how people's writing moved from paper to digital and how music moved from cassettes and CDs to streaming and MP3s, and how film moved from chemical to digital again. And every time an industry saw its substrate shift from analog to digital, you saw a few things happen. You saw customers get an amazing experience for a fraction of the cost. You saw explosive growth, and you saw a changing of the guard. And I think there is a case to be made that insurance is going through something similar, that an industry that has been around for hundreds of years and done in a particular way with brokers and with paper is finding it shifting through companies like Lemonade onto a digital substrate, and suddenly you see explosive growth. You know, we just hit 1 million customers 4 years after founding. It took USAA, which is an incredible company, 47 years to get to that same milestone. And when you see that kind of 10x change, there's a case to be made that this is a change in kind a change in degree that amounts to a change in kind.
Last week, in fact, 10th of January, to be precise, your co-founder and COO issued a defense of the stock price in response to the short sellers, then fairly quickly deleted those tweets. Well, why did he delete them?
So I think Shai wasn't defending the stock price. We actually take very little interest in our day-to-day stock price. This is a multi-year, indeed multi-decade journey we're on. Insurance companies can last for hundreds of years, and certainly doing what we're going to try and do is not going to be done in quarters or months. So the short-term price of the stock was not of interest to him. It's not particularly of interest to me either. We're really with an eye on the long term. What he was taking umbrage at was people who are doing less than deep analysis, and in order to drive stock, if they're short selling, in order to drive returns there, they're producing reports that he felt weren't compelling. He deleted it because, honestly, we've just found an outpouring of support by investors, by the community at large. And overall, we couldn't be more grateful to the investor community who has continuously doubled down on Lemonade, believed in the future. And I think with good reason. You know, if you look at our most recently published results, you saw that our business doubled in size, even as our losses per dollar sold halved. You're seeing an acceleration of the business. You're seeing customer satisfaction levels, NPS levels that are equivalent to a Tesla or an Apple, which is unheard of in insurance. So as we see this flywheel spin faster and faster, and that feedback loop of more data, digital substrate, better consumer experience, feed on itself, I think more and more people are believing that there is something worth looking at very seriously.
Was it unfortunate timing, Daniel, that the company sold stock, some insiders sold stock the same day the defense of the stock price broadly, whatever you call it, was issued by the COO?
I think that's a matter of indifference. We sold stock last week, certainly at $165, which is where it was at, and a $10 billion valuation. We felt it made sense to increase the reserves that the company has. We've raised over $1.4 billion since the founding of the company. We have over 1.1, so we are in a very strong position. And given the aspirations of the company, I think that's a pretty good thing. It's really something that we can continue to accelerate and lean in to the kind of investments that we've made. As fast as the growth has been, and as the product launches have been, and the country launches has been, we look forward to doubling down on those going forward.
Daniel, just on this whole question of differentiating yourself from the competition and really disrupting the insurance business, it's a multi-trillion-dollar business, which I think is why your stock is valued at almost $9 billion and no profits. What is actually the key differentiator? I've heard you talk about this issue of trust. People like the Geico commercials. They like the State Farm commercials. Why do you say trust? What are you actually doing differently there?
Yeah, so we've seen this in the data, but from dinner table conversations, people don't actually trust insurance companies. Most Americans, when surveyed, say that they don't believe their insurance company will pay them when the day comes. Indeed, most Americans consider insurance to be not a social good, but a necessary evil, which is such a shame for an incredible industry that's all about helping people in their hour of need. And at its core, I think there's a business model challenge in insurance, which is that the way consumers experience insurance is that I've paid you all this time, and now when I need money, we're in a conflicted relationship. If you pay my claim, I'm better off, you're worse off, and vice versa. And that creates deep distrust in insurance. Lemonade has tried to build an alternative business model where we have a flat fee model. So we never make money by denying claims. We are aligned with our consumers, and we use charities as a third party where underwriting profits that are not used to pay claims go to nonprofits in what we called an annual give back. And that changes the whole nature of the relationship from one that is a conflicted bilateral relationship to a trusting trilateral relationship because nonprofits are part of the organization. And indeed, we founded Lemonade as a B-Corp based on this behavioral economics thinking and a lot of the social sciences of recent years on the one hand, and all of the AI and digitization on the other. And you combine the two and you end up with something that is qualitatively different. And that's been driving prices way down. First-time buyers of insurance can buy insurance for half the price of the Geicos and State Farms of this world. But it also creates a brand and a relationship and a trust that people tweet about and share, and that drives that feedback loop we were talking about.
Well, on that point about charities and B-Corp, one of the short seller arguments is that you're attracting a lot of funds because you are self-described as an ESG play, and there were questions about that. How much have you actually given to charity as part of this business model, say, in the last year?
Yeah, we don't self-describe as ESG. We just describe what we do, and investors will make a decision as they see fit. But the answer is quite a lot. We have a couple of platforms of giving. So we have a give back, which is an annual give back along the lines that I just described, and we gave over $1 million there just this recent July. But we do that every year, and that's really dependent on the underwriting results, which in turn is dependent on the good fortune and good behavior of the insurance company. So that creates that alignment. And as a percentage of revenues, that's about 10x more than the Fortune 100 gives. So I think it's a pretty sizable jump. And as you say, for a company that's not even yet profitable. But in parallel to that, we gave a chunk of equity to nonprofits. We actually established the Lemonade Foundation and put a lot of equity into that. That equity today is worth about $75 million, which is now in the hands of that nonprofit. So a sizable chunk of change, no doubt.
Daniel Schreiber, we certainly appreciate you coming on and talking about all of this with us.